Welcome back to Squawk on the Street. Yes, there's more breaking news on this Friday. Last trading day of the quarter, our February read on new home sales, 667,000, an upside surprise in housing. Now, of course, that's seasonally adjusted and annualized clip, and that is well above an upwardly revised 636,000 last month. Still leaves it up just about 5%. And if we look at what's going on with University of Michigan, we get our final read. We tossed the mid-month read, which was 97.8, and another reach higher, 98.4. That is a good number. 98.4 is the best level that we've had since October of last year. And let's go through some internals. Always fascinating. The one-year inflation moved up a tick from 2.4 to 2.5. 5 to 10-year inflation outlook, a lateral move from 2.5, remains at 2.5. So even though we had a little bit of lightness earlier with respect to Chicago PMI, new homes and University of Michigan powered up a bit. Sarah, back to you.
Rick, thank you very much. Good morning, everyone, and welcome back to the special edition of Squawk on the Street. Ride-hailing service Lyft set to make its public debut any moment from now. We've got full team coverage and analysis for you. I am Sarah Eisen here with David Faber, live as always from Post 9 at the New York Stock Exchange. Carl Quintanilla has the morning off. Taking a look at the markets, looks like we are headed for a strong finish to a strong first quarter. The best for the S&P 500 since 2009. The S&P is up 0.5% today. Nasdaq up a little more than that. It's energy stocks that are in the lead. It is one of the first in a wave of tech unicorns expected to go public this year. Lyft making its public debut at the Nasdaq today. The company pricing its initial range at $72 per share, valuing Lyft at more than $20 billion. We've got full team coverage and analysis for you as we await the opening of this stock. Seema Modi has all the action for us at the Nasdaq. Deirdre Bosa is at the Lyft line at the San Francisco International Airport. Andrew Ross Sorkin is in Los Angeles today at Lyft's Driver Center, where they rang the opening bell remotely this morning. Talked to the co-founders, but we begin with Seema, waiting that first trade. Any indication, Seema?
Well, Sarah, given the size and high-profile nature of this IPO, it is all hands on deck here at the Nasdaq. We're on the top floor, right next to the Nasdaq's IPO and capital markets team. Brian, Steve, but Jay, that's the guy you want to know. He is the chief IPO officer for the Nasdaq. At this point, they're still collecting orders from pre-IPO investors. Around 10:35 a.m., that is when the IPO discovery process will commence, when Nasdaq, in conjunction with JP Morgan, the lead underwriter, will try to align buy and sell orders. Not till 10:45 will we see shares eligible to trade, but from what we understand, we won't see the first trade till around 11 to 12 p.m. In the meantime, this IPO is being watched very closely. It unofficially kicks off this tech IPO frenzy where a number of companies from Palantir, Slack, Pinterest, Airbnb, even Uber, all getting set to go public. So that's why this Lyft IPO is generating so much attention, not only given its size, biggest IPO for the Nasdaq since Facebook went public in 2012, but they also have a lot of shares to issue, 32.5 million shares. So that's another reason why Nasdaq is trying to be very meticulous in this process, use a fair and transparent process with the lead underwriter to ensure all the investors get the amount of shares they want, and also leave enough money on the table to ensure they can encourage retail investors and post-IPO investors to get into this company. We'll see where it trades. Of course, it did price at the upper end of its range, $72. Guys, for now, back to you.
Seema, thank you. And as we await Lyft's first trade, billionaire investor Warren Buffett with a bit of a warning for regular investors here on CNBC just yesterday. Take a listen.
We haven't bought an initial public offering, or I haven't, Charlie hasn't, I think since 1955. I think buying new offerings during hot periods in the market, I don't think it's anything the average person should think about at all.
Joining us now is Elevation Partners co-founder, early Facebook and Google investor, Roger McNamee. His new book, Zucked, Waking Up to the Facebook Catastrophe. And John Ford also joining us from the Nasdaq, where he will be anchoring Squawk Alley, a very special Squawk Alley from the Nasdaq today. Gentlemen, good morning. Roger, do you heed, if you're a retail investor, Warren Buffett's advice, or you buy into the hype today?
I think it's always smart to listen to Warren Buffett, particularly when he talks about the stock market. You know,
what
Sarah,
about
I think
Lyft?
the... Yeah, I mean, look,
how does it look to you? I mean, signs so far look good, right?
it is a great deal for Lyft, right? The company is in this battle with Uber. And we've talked about this on other shows, that the challenge for those two companies is that there isn't room for both of them to participate and be profitable. So it's a little bit like what we saw with XM and Sirius, where, you know, they need to raise a ton of money. They're going to beat each other up like crazy. And so this is a fantastic deal for the Lyft management team and for the early investors. I think for the public market buyer coming in today, this is going to be a lot dicier. And because it's the first one out, it's not crazy to imagine the stock does well initially. But in the long run, they have this fundamental problem. It's not a profitable business today, and they have a really well-financed, much larger competitor. And the two of them, I think, are just going to have to slug it out until one of them either runs out of cash or the two of them merge.
It's funny, Roger. John, remember I did mention XM and Sirius to you yesterday, I think, on set as something that we could see. Of course, you always wonder from an antitrust perspective whether it could ever be allowed years down the road for these two to get together. But near term, John, did you hear anything from the interview with Andrew earlier or anything you've done in your work that does indicate the path to profitability perhaps will be sooner than investors expect?
No, David, in a word, no. I didn't. And here, I think, for investors is the conundrum. On the one hand, yes, Warren Buffett, greatest investor ever, et cetera, but you shouldn't follow him on the likes of Amazon. He didn't see that coming. And I hear a lot of people talk about Amazon when they talk about the fact that a company like Lyft isn't profitable. But if you think about what Amazon was doing all those years early in its public life, it was building this logistics network that was unique, that nobody else had. It was the foundation of Prime. And I think you got to ask yourself, with all these losses, what is Lyft building that's going to put it in a unique position versus Uber and everybody else? I do not think they've done a great job explaining that, especially because a lot of what they've been spending money on is marketing, driver incentives. A lot of those same people they're marketing to can also use Uber very easily. Those same drivers drive for Uber as well.
Well, they say they're the nice version of Uber, and they capitalized on some of Uber's flops in the last year. Are you saying, John, that doubling of revenue growth that we saw is unsustainable?
Well, I'm saying that infrastructure and competitive advantage goes beyond nice. I'll tell you what, Uber got a lot nicer since Dara Khosrowshahi showed up, a lot nicer than I thought they could get in that amount of time. So that sort of cultural and feel issue can change very quickly, for better or for worse. If Lyft stops paying these kinds of incentives to drivers, we'll see how they feel about them versus Uber once the public markets have their spotlight on them and they're under that kind of pressure. But I think as an investor, that's what you really got to be thinking about as you look through this S1, as you think about whether to invest or not. What's the sustainable competitive advantage? What is Lyft investing in with all these losses?
Yeah, you know, Roger, when it comes to Uber, which investors will be able to probably make a decision about pretty soon, the businesses such as Uber Eats or Uber Freight, do they, in your mind, sort of change the equation there in terms of a comparison with Lyft?
Yes, so David, I think we now have a new rule, which we add to the Warren Buffett rule, which is investors should always listen to John Ford. I completely agree with what John just said. And so I think all the ancillary businesses at Uber actually have a lot of interest. I do think this notion that there are delivery services that can be delivered economically to the consumer that have real value, that's a no-brainer. The challenge, I think, on this whole thing is that the scale of these companies, in order to be profitable, has to be simply gigantic. And the market values that we're putting on them today assume that they will be profitable at that giant scale. And I just don't think there's any evidence yet that with two players in the market, that there is enough differentiation for that to work. And from Uber's point of view, whether it's Eats or any of the other ancillary delivery services, they aren't a big enough part of the piece to offset the damage of going toe-to-toe with Lyft in the United States and with other players in other markets, you know, every single day. I just think it's a tough business. And as John said, it's not like they're building permanent asset value here. All of this is about competing in the moment.
Yeah, I know, but John, at some point, John, when you make that move to autonomous and the costs potentially decline dramatically, I don't know who owns the fleet of cars, but maybe it's some sort of leasing arrangement with a REIT-like structure for that. You would think these businesses look a lot different. Now, I don't know how many years that is away, but you could probably start a discounted cash flow model and, you know, pretty soon.
Sure, and you got to ask yourself, how long-term are you prepared to be as an investor? Are you willing to wait 5+ years? Some years it might look pretty bad. I mean, if you invested in Snap, how are you feeling about that? It's still relatively early in the game for them. They're not looking too hot. They were kind of in the Lyft position versus Facebook, although they didn't come out first, kind of a second-tier player, but one who a lot of people thought, hey, well, they look better than Twitter, growth-wise. They've got some unique things going on, a very unique founder, CEO in control. So how long are you willing to hold your breath? How much faith do you have in the leadership, their vision, and again, what it is that they're investing these losses in? I mean, $900 million, that's a lot of money. That's a big hole that they're going to be digging themselves out of if they succeed.
And I'm so glad John brought up Snap. Roger, can I just ask you a quick question? Because I think Snap is indicative of the fact that today doesn't necessarily determine what kind of investment it is. I went back and looked in 2017, first day, Snap closed up 44%. It's now lost 2/3 of its value.
Well, no, Sarah, this is so correct. And John's making a really important point about the driverless car thing. I believe the time horizon for that is substantially longer than the bulls would have you believe. The history of automated vehicles, which we've seen with airplanes and we've seen it with large ships, is that you need to have special lanes. You need to have all kinds of, essentially blinkers everywhere to make sure the thing doesn't run into stuff. We haven't made any of the changes to our transportation system to support it. And so I think there's a lot of hope built into this valuation. And there may be a lot more that goes into it when it starts trading, right? I mean, sir, your point is exactly well taken. People could be so enthusiastic because it's the first new IPO of this scale since Facebook. And, they may run the thing way up. But if they do, there's going to be a lot of money to be made when it comes back down to earth.
We are going to talk a lot more about all of this. John, thank you. We'll see you in a little bit for that big special hour of Squawk Alley at the Nasdaq. Roger, please stick with us. We've got to talk about this wave of IPOs and sort of where it puts us in the cycle on the last day of a very strong quarter.
People love growth, and we're starting to get at least some names that do have growth that we don't typically see. We've got some other big news, though, this morning to get to. Embattled Wells Fargo CEO Tim Sloan announcing he's retiring after 2.5 years at the bank's helm. Our Wilfred Frost has more on that news for us. Will's been following this all the way through. What do you got?
Good morning, David. Yes, indeed. As you said, Wells Fargo signed and retired effective immediately.
While I'm confident in my ability to effectively lead Wells Fargo through the work that remains to be done, it has become apparent that the focus on me has become a distraction that impacts our ability to successfully move Wells Fargo forward.
That was Tim Sloan, of course. Wilf having some trouble with his mic. We'll get back to him, I think, to get more on that report. Of course, Mr. Sloan, somewhat unexpectedly stepping down. Sarah saying in many ways that, he felt, I guess, that he'd become, or at least indicated, a distraction to the extent that it was no longer beneficial for him to continue.
I think there's some important questions going forward about politicians' role in this. The fact that you have influential politicians like Senator Elizabeth Warren running for president, so outspoken, obviously putting so much political pressure on a company where the board chose Tim Sloan, the biggest shareholder, one of the most experienced shareholders that we cover, Warren Buffett, supports Tim Sloan. What does it say about the influence of politicians right now in their ability to choose CEOs, and what kind of precedent does that set?
Yeah, good questions all. All right, up next, we're going to take you live to Lyft's Driver Center in Los Angeles. Andrew Ross Sorkin is there. He's got Andreessen Horowitz co-founder and Lyft board member Ben Horowitz is his guest. Not going to want to miss that. And as we wait for Lyft's opening trade, well, don't go anywhere.
Big suspense.